Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Hi everybody, welcome back to my channel. It is Tuesday, August 26th. It's been a week since I've done my videos. I want to share with you my thoughts about the movement so far this week. And I also want to add one additional ticker to the end of the video. So please watch to the end for a long trade idea. Let's start with the triple Qs. You can see all these shark sell signals here based on the momentum change. My annotation from last Tuesday was price action will probably continue to use overhead resistance up here and then continue its downward move. My overall thesis remains the same. It's unchanged, even though the price is moving a little bit sideways action. Overall, it's still lower prices for triple Qs. This isn't the time to go long. Okay. On to GDX. GDX has moved in a slightly different direction from how I made my annotations. Tuesday last week is on this red candle, and I talked about how this trend line would be resistance. You can see that since last week, price has continued to move up with the volume being, I'll call it mediocre. It's not high. I'm just going to zoom out so you can see the volume candles down here. Okay, you get a feel that volume is going lower. Okay, it's lower volume, price action moving up. I made another annotation here, this trend line, this thicker one. I'll just kind of move it so you can see. That thicker trend line has been support from here, support here, support again here, and it was actually resistance on the day before. So this red candle, kind of resistance. You can see this was an attempt to come down to it. So I think it will be a support zone. Oh, excuse me. I'm talking about the wrong trend line. This is the trend line I'm talking about, this one. So support here, support here. As we get to this zone here, there was an attempt to stay above this trend line. This is the trend line I'm talking about. It used as support here with this candle. Okay. And I kind of see some movement through it here. Okay, so I think it's a legitimate resistance line. So I'm going to annotate it here like this. So it's overhead resistance. Okay. So when price gets into it, probably resistance, I still say GDX is going lower, even though it moved past my resistance projection here. I'll remove it for now. So the resistance is up here. My annotations I moved to the right for the low prices is the overall direction from where we are up there down to here. Okay, it's all notional, but really it is downward price action for GDX. And all due to this bearish divergence down here. Okay, two sharks sell signals right there. On to strategy. From a branding standpoint, MicroStrategy changed their name. They kept the ticker MSTR, but they shortened their name. So now it's just strategy. So for the strategy ticker last Tuesday, which is on this candle, the red one, I talked about how it would come up to this 200-day. I should have made it red. There you go. 200-day, and it would be resistance. So that's why I drew this line here. It's behaving as I expect. I'm going to move this up a little bit like that. Okay. Where I think there is some decent support is down here around the 300 range. But for now, for the low prices, continue is my projection for strategy. On to Bill's company. his former company, Microsoft here. I talked about how this gap fill would then be resistance. Let's see, the Tuesday is here. So when I made my video last week on Tuesday, the close was down here on this candle. Okay, so it closed at about 510-ish. And you can see that price hasn't really attempted to hit the bottom side of the gap fill. I still think the bottom side is still in play. Overall, the direction remains unchanged for me for the low prices for Microsoft. The 200 days down here, just kind of slide it over. If you're in Microsoft, take your profits now. Yeah, sell signal. Okay. On to Tesla. Tesla's overall direction has moved upward. I drew this trend line tonight because you can see it here. Resistance here, some support all throughout here, some resistance here, resistance. So I believe it's going to be resistance again. So I'm going to just move my predictions over to the right for the low prices for Tesla. And just kind of go like that. Okay. That's resistance. Now you might say, well, where is the sell signal? The sell signal came over here, right? So where the shark is here, it's at about, what's that? 365. So there's only a little bit more room for price to attempt 365. Okay. I don't think it'll get there. The momentum is already down, has been signaled out to all of us. So it probably won't get to 365, and then price will begin to fail. Okay. On to Palantir. Palantir, last Tuesday, I talked about it. Let's see, last Tuesday is this candle, the red one. It sold down, so it filled the gap, okay, on the red candle. And then it used this trend line as support, long-term trend line as support, without any bullish divergence, okay? Just use it as support just from price action and retail investors. It came back up. You can see that it attempted to go into what was the gap, failed on this, the Friday. Today, it attempted to go into it again. It poked its head through it during the day, but then it closed right at the gap fill, okay, at the bottom edge of the gap fill, which to me is resistance. It's going to be resistance. So this is all resistance. And for the low prices for Palantir, the overall direction is the same. I still think it's going to head down to this 105 zone. It'll take some time, but this is not the time to go long. Okay. On to Northrop Grumman. Northrop Grumman here is resistance, this red line that I drew. And with the highlight, I wanted you all to see how I'm emphasizing that. You can see the price action today, yesterday and today, attempted to push through this resistance, and it hasn't. At the same time, you can see that there is bearish divergence. I'll get rid of this for now so we can show you. There you go. Bearish divergence. Price going upward, momentum going downward. So that's the additional shark indicator. Let's see here. Let's put the shark in. Okay. So really, just further low prices for Palantir, for Northrop Grumman. And definitely this gap fill is down there. So that's really the target for now on the downside. All right, so if you're in Northrop Grumman, take your profits and wait it out. Wait it out, and then we'll reassess down here if it's the right time to go back in for a long. On to GM. This ticker, I talked about it, how it would On the Tuesday here, I talked about it's at this resistance spot right here. So my annotation on Tuesday was the squiggly line to say that, you know what they're going to do is they're going to bust it up, bounce it around up here, only to have it then fail. So that's what I think is going to happen. And it's been doing it for the past 1, 2, 3 candles. Okay. So my overall direction remains unchanged. You can see it there. I'll just keep it like that. I won't update it. Overall lower prices for GM. General Mills, the consumer cereal company. I'm in this long, so I'm in this trade. My annotation last time was this right here to show you that if it busts through, it would be a beautiful entry right here on support, this purple trend line support. Okay, it only stayed up there for one day, and then it failed. A lot of selling, but you can see today is a more volume. So 10 million, okay, 11 million shares, whereas, this sell signal here, 4.7 million. So the buyers are coming back in. To me, this is support. My new annotation tonight is this one right here. If price comes back down here, that's a good entry. I don't think it'll come back down here. It's a bit far now. So the next zone of support is here. I still think this is a good long opportunity. It's just how you want to size into your trade. From a long-term perspective, this purple trend line goes back many years. I'll just switch to the weekly chart for you. Weekly chart, it goes back. This right here is the end of 2018. And it goes back all the way here to the 2010 zone, okay? So it's a long-term support line. I think the algorithms know it, and the retail investors don't. So I'm sticking with the algorithms and how the sharks want to play it as a long. Let's switch to the consumer clothing company, Abercrombie and Fitch. This was a short, at least in the near term. I talked about it for a while. The price action remains the same. No change in direction from my perspective. The momentum indicator informed us of the sell signal. Okay, so get out. This price action here is resistance. I had this here like this. It's resistance. I'm just sliding it over. It will remain resistance, the 200-day. This move here, this past week, let's see, where was Tuesday? Tuesday's here. So all this price action is, retail investors want to get back in. It's not a change in momentum for the sharks and big players. Overall, the direction is down, with support down here at around 74. I am in this short, so I'm doing okay. So I'm not getting out of my trade because with conviction, it's going to lower prices. It'll be a good trade for me. Okay. And then on to the bonus ticker. It's a long UPS. I'm going to switch to the weekly, give you a long-term view. UPS has bombed out. Check this out. Actually, I'm going to go to the monthly view. So the monthly view, each candle is a month. And you can see since, what is this? The peak here of 22, the peak of 22, and then since then, price has been going down, down, and down. Okay. So that's what, 22, so 3 years, 4 years of further low prices. From the peak, I'll just kind of go like this, get a feel to where we are now. It's about a 60% drop. Okay. That's not a tech company. This is a consumer discretionary company, I believe. So it doesn't move as volatile as a tech company. But the way that the chart looks is really clean. So from my perspective, this is the monthly. We can see how I drew this line down here at about 87, okay? I'm going to get rid of the momentum indicator just to give a cleaner look on the chart. This line here at about 87 has been resistance. Okay, I'm just going to annotate it here. Resistance there. And then as we move over, you can see that it's been a resistance here. And then it became support here. As we move over, once again, it's been all support here. So as what I'm trying to teach you is that the algorithms pay attention to this line, this 87 line. They know how to behave, what to do when they get there. So what you can see here is this is a monthly chart. So each candle is a month. This month right here, the red one, you can see a lot of selling. Look at the volume in that month. 154 million shares. Okay. And then in August, and August isn't over, there's more buying, 157 million shares. And we still have a couple more days left. What I'm hoping to remind you is that the algorithms know what to do around these lines. So my conviction for UPS is a long. Let's go to the weekly. Okay, so the weekly, you could see big sell signal here on Monday. And then one could argue that this is a flag. Okay, so this could be a bearish flag. I get that. Could be a bearish flag. And one could draw it that way. Okay, you could draw it that way. It's fine. Actually, before I draw it, let's go to the daily. Okay, so here's the daily chart. Zoom out a bit. So the daily chart, gap here, and then all this selling beginning Tuesday the 29th. So selling, 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 selling. Okay. Now, when I add the momentum indicator back in, you could see that this point here in early April, the price is higher than this point here. Okay. But the momentum indicator, it's bullish. It's the opposite. Okay. It's lower down here and higher price here. I'll just kind of zoom in for you there. You can see that. All right. So from my perspective, I'm going to put a shark here down here to say that they're telling one another, hey guys, get back in. Actually, you know what? I need to change my emojis. So I'll use the shark for a sell. Let's see if I can find like a whale for a buy. Let's see. Okay. So the whale. Okay. So the whales have told one another to buy back in. Okay. So a slightly different view for you. A whale is more friendly, so we go long, and a shark is for the short. Okay. So there's the long signal right here. So my first target for us, if you were paper trading, because I'm not a financial analyst or investment advisor, if you were paper trading, you could see the risk reward, right? The risk being along this support line here. If it breaks underneath it, then maybe get out of your trade. And the upside is at least to the 200-day. So 200 days, like that. So, it's a 1 to 4 ratio. Okay, 1 to 4 ratio, pretty good ratio. All right, so I'm going to wait for the right entry. So if it comes down a little bit further, they might dip it down here. I'll use that as support. Or if it gets close to it, it won't be perfect. I'll take a long myself. My target would be up here to this, either to this trend line, this trend line here, right? Or to the 200-day, okay? And that would be about a 20% move. All right, so that is a long idea for you. I know it's not cool like a tech stock, but you got to go with what the market gives you. Right now, the signal came right there with the whale to go long. on UPS. All right, well, I hope you enjoyed this video. I hope to keep doing them once a week. Twice a week was not giving us a lot of time to allow the trade to take place. So I'm doing them once a week now. I kind of like the Tuesday. I might do it on a Wednesday. And as always, please like and subscribe and click the notification bell. Inform your friends and family and leave me a comment. Let me know what tickers you want to look at or if you disagree with what I'm sharing with everybody. All right. Have a good week and good luck with your trades.